Deven Choksey joins us. Good morning, Deven. How are things?
Hi, Nikunj. Good morning. Very well. Thank you.
What's keeping you busy? Markets तो कुछ नहीं हो रहा है.
I know. I think the markets kuch nahi ho raha hai, but overall, looking at the opportunities in the investment markets, particularly when you are seeing many of the good quality stocks are now being neglected despite of good fundamental performance and the promises to have relatively better performance going forward. They are here being neglected, and that is what is asking us to review the portfolios again and probably try and increase the weight where we are more comfortable. We are comfortable with some of the auto names. We are comfortable with auto ancillary names. We are also comfortable buying into some of the IT and mid-cap IT names into the portfolio. And probably, I think, closely looking at, I think, how the commodities are behaving. Maybe, I think, at this point of time, not taking exposure into commodity, but certainly want to keep an eye on it. If it gives the signs of stability, then probably I think it will be the next thing to look out for eventually.
Added any Adani group of stocks in this decline in last 7 days?
Not really, Nikunj. I think we've been holding on to ports and transmission, and I think we continue to hold both these companies, looking at the fundamental strength of both of them. Honestly, I think not added any other stocks at this point of time in the portfolio. So some of them have started becoming attractive. One could possibly allow the situation to get calmed down, then probably try and take some position into those companies.
Suresh, if the narrative for Adani group of stocks is slightly bearish or is cautious, then why is Ambuja and FNO banned? What does that indicate, Nuresh?
Say the derivative ban in India is more so because we have a market-wide position limits which are very, very tight. Unlike you can go into the US, it can be much more higher than the number of shares available. So it's been tight. So whenever the positions come in, and it also calculates the options as well. So overall, say it is coming in and out of it, and this keeps on happening whenever the stock sees a lot of volatility or a lot of move, or companies where the volumes have significantly gone up in the near term. So I would not give it a much credence because say the market-wide position limits do not go to 20% of equity, so it's just 5% to 10% of equity in most cases. If you look at the free float, etc. basis, so overall it's a very small number, and that's the reason a lot of stocks keep going into it. So Ambuja Cements is something which is now getting in and getting out of it. So today it is out of band, but overall the stock is making a base. So I like the stock at current level. So this is the only one which I like in the whole Adani pack.
All right, let's find out some top fundamental stock recommendations then. And Sandeep Sabharwal here lists out his top fundamental idea.
We hold is Apollo right now, and I would think that the company will continue to do well because of various factors. One, they have cut down on capex significantly, so next 2 years we'll see deleveraging in the balance sheet. Secondly, as per the company conference call, their raw material product basket will fall another 5% in the fourth quarter because typically they hold inventories for 6 months. So the entire rubber prices are in fact down significantly, and crude derivatives have also fallen as supply has increased. So profitability will keep on improving. Demand is subdued, but in these kind of industries, sometimes you have huge volume growth, but profits decline. So that doesn't create any wealth for shareholders. We need profitability growth. I think profit growth will be strong, and going forward, if the demand also revives, then that could be an added benefit. So we continue to hold Apollo Tyres.
The markets have been stuck in a range. Last 13 months, Nifty has just gone nowhere.
The index has doubled in 3 years, and if you expect more than that, I don't think the stock market is a place for you. The bull market has started when the finance minister announced the long-term rates in income tax for corporate India 25% is still intact. It's still headed higher.
All right, let's keep it with individual stocks then. And what's the outlook, Deven, when it comes to Cipla, given the fact that we did see that delay of Giadvir, then there was the inspection by the US FDA on the Indore facility. Has it now been priced in, given that the stock was a big loser in trade yesterday?
So I'm not too sure, Avan. I think how much negative sentiment it can continue with, because I think what one has learned is that in pharmaceutical business, moment you are exporting to America, US FDA, I think gets more active, and that is where probably I think most of the companies have suffered at one point of time or another. I guess I think this is a situation which every pharma company has to live with. And probably, I think one will have to look at the business. In case of Cipla and Sun Pharma in particular, I find that the portfolio of products that they are relatively, I think, more stable. Probably, despite of all these inspections, and I think hopefully they come around with, I think, the clarity on these inspections. I would rather like to believe that I think product portfolio remains absolutely strong proposition, and there exactly the margins are also, I think, relatively stronger compared to many other generic players, because they are basically into the complex generic specialty generic products. So from that perspective, I like both these companies from investment, and would like to believe that yes, I think they would have probably the ability to answer those US FDA inspection queries, and probably I think they will turn around. So yes, currently the stock price has corrected. Maybe I think the fall continues due to negative sentiments. Maybe one can add the stock into the portfolio in subsequent fall.
Even outside what happened to Cipla yesterday and where markets are headed, which is one stock which you've been holding on for from last 10 years, and you have, as of today, every reason to believe that you would like to hold it for another 10 years.
So if it is for pharma, Nikunj, I think
Across the board,
Cipla
across the board. One stock Deven Choksey bought in 2010, and he has every reason to believe that he will not sell it before 2035.
yeah, I think that includes the list of course, Cipla we have been holding from 90s. But the more important part of 2010 onwards, or maybe little earlier to 2010, I think companies like Bajaj Finserv and Bajaj Finance, we continue to like this particular business and the way in which they are growing this business. The subvention pricing mechanism has probably yielded maximum amount of return to the company from the capital employed, and at the same time to investors as well. And given the kind of technology strength that they are adding into the front end for adding different products and distribution of those products in the financial basket, I would like to believe that Bajaj Finance, particularly, would remain a very strong proposition in the portfolio. And any corrective fall, the one which we saw recently, I think are the opportunities that one thinks that I think one could add into. Similarly, the situation is FinServ, where the insurance portfolio is gaining much more strength, and they are basically writing profitable insurance business. That is what is more important, and that separates them from many other insurance companies. So they are relatively slow because they write profitable business. I would think that I think this is a good strategy eventually for the longer term, because insurance is a business which you write for long many years. So that is where I believe both these companies could remain in my portfolio, given the kind of strategy that they've implemented.
45 times in the last 10 years, and that's the market or magic of compounding. 45 times for Bajaj Finance in the last 10 years. One insurance stock which did rather well for itself and was an outlier yesterday, Anuresh, was Star Health. It's a stock where Rakesh Jhunjhunwala and Rare Enterprise have an investment. It's nowhere close to its issue price. It in fact did rather poorly ever since it has been in the public avatar. What do you make of yesterday's price action, Anuresh, in Star?
So yesterday was a good price action in terms of volumes also. The volumes were the highest in the last 6 months. The last time it saw volumes was back in July when it started recovering. Say in July, it made a bottom around closer to 470 levels. This time the bottom in say December was around 480. The January, February bottoms were around 489. So it seems like there is a base at 470 to 500 for the stock, and that is the place it bounces back from. So yesterday's price volume action was positive. A large volume uptake from the bottoms is generally a good indication. So in this case, the trade would be, there should be a little bit of a fade off of this candle, and that should be a buying opportunity wherein you keep a stop loss at the low of the last candle, which is basically 512, and try to buy it closer to 530 to 550 in the decline if it comes over the next couple of sessions.
Some defense stocks as well in the spotlight. BEML, for instance, has joined hands with DMRC-led special purpose vehicle. This is to construct the Bahrain metro. And you've also got Bharat Dynamics, who's received an export order to the tune of $255 million. In fact, let's hear our Nishchal Maheshwari's view on the defense space and some of his top ideas.
I'm very positive on the whole outlook as far as the manufacturing and infrastructure space is concerned. Our top picks, and even in case defense also. And now I think Prime Minister has announced that defense export is what he's going to focus on as a government. And they are targeting, I think, 5 billion of worth of exports by some date, 2025 or 2030. I think some number is there. So I think these are all very, very positive indicators. So government is totally supportive of the sector. What are our topics in this? So I think defense, we continue to remain positive on HAL. And in the private space, we like solar industries. These are our two topics as far as defense is concerned.
Okay, let's get a view then from you, Deven, as to what the outlook is on defense. We heard Ramesh Damani talking about how he's bullish, just a short while ago, Nishchal as well, taking out his top bets. Given that some of these stocks have been in the news and have been perking up in an otherwise dull market, which are your favorites?
So given the fact that I think there is a market which is opening up for about 8 lakh crores worth of revenue in the defense space, some of the established players would probably have the lion's shares out of this market. And that is where probably I continue to like solar industries, their subsidiary economic explosives. I think is basically the one which is catering to defense. What I have understood in the defense business over the last many years, that I think this business has a long gestation period before it gets acceptance or the product gets acceptance. And once it got accepted, I think that you have a sustained revenue with a profitable business. Solar industry in particular, I think have been we like because of the wide range of product portfolio that they have created for a period of time, and at the same time strategically investing into newer technologies like drones, for the purpose of launching missiles and the rockets. I would think that I think this is one company where one could possibly keep an eye on. Of course, I think valuation wise it is not cheap, but it has always been like this, given the kind of low floating stock that it has in the market. Valuation has always remained a little bit more on higher side, but this company remains relatively more stronger bet into the defense portfolio as far as we are concerned.
We've got a big exclusive, none other than Mr. Narayan Murthy. It's going to be his first big exclusive television interview in a while, at least the first one for 2023. And it's the timing which really matters here, because there is so much happening in the world of technology, there is so much happening in the world of AI that everybody really wants to understand his view on what is the future of AI. Will it be ChatGPT? Will it be Google? Tech layoff, why they are happening? Is the Indian IT sector going through a phase of contracted slowdown? And if worst of the attrition is behind us, then when will really growth make a comeback? There is a winter in the startup season, in the startup world. How will that impact the innovation going forward? So that is one big voice you certainly don't want to miss. At 10 o'clock, stay tuned to ET Now. It's going to be live and mega exclusive. Mr. Narayan Murthy on his thoughts on India, tech, disruption, and the startup world. Deven Choksey, what would you like to hear from Mr. Murthy today? What is that one thing where you think everybody wants to understand his direction, his guidance, and his view?
Yeah, it's a very important question, Nikunjan. I look forward to this interview that you have taken of Mr. Murthy. Definitely, I think few things which comes in the mind as far as I think the business model of Indian IT companies is concerned. Something which they started with in 80s and 90s. And now today, they are basically, I think, more ready to deliver the newer technology related solutions, be it in the space of AI, ML, DL, or in the space of blockchain. cloud computing. Each of these technology blocks, I think these companies are now basically adopting and they're producing solution. One would like to hear how the business transition is happening. Like we do understand that companies like Infosys and TCS have already geared themselves up for that. But how the transition is happening and how exactly I think the players could play position into it is something which I am always very keen to understand and know about it. Secondly, how the business model is changing for the user companies. Up till now, IT was being seen as a capex item in most of the balance sheets. Now the IT is being seen as a revenue expenditure for most of the balance sheet because the companies are offering the IT-based solutions which are being consumed for providing the services to end customer. So whether companies like Infosys is basically making a move to get into the providing a solution-based approach, or SaaS-based approach, as we call it as far as their business is concerned. It's something which I would like to understand, which means that I think the product-based solution, if the company is adopting, then one would probably like to look at it because that gives you confidence about the sustainability of the revenue going forward in this changing world. So few things definitely I would like to catch up with your interview at 10 o'clock today.
Couple of other stocks which are going to be in focus, of course, Kotak Mahindra Bank, not just Uday Kotak's commentary, but the fact that sources seem to be indicating that the company is now tapping on to global firms like Egon Zehnder for the CEO search, someone who is going to take on the reins from Uday Kotak. That said, Interglobe Aviation is well in focus and air travel has set a new record in the month of February. The average daily passengers now stand at 4.20 lakhs. So not Interglobe, that's not really been seeing a rub off, but yes, it's the hospitality names which are definitely holding out very well. Be it in Indian hotels, be it Lemon Tree, the entire gamut has been extremely abuzz. Deven, given at the strong data inflow, and I think the air travel numbers are clearly a very good indicator. What's the best way to play this story? Would it be by the one aviation name that you have within the listed space, which is Interglobe Aviation, or would it be via the hotel space?
The business prospect wise, I think I have never doubted the aviation space. I always felt that India is one market where the demand scenario will keep the most of the aviation companies extremely busy with either the new capacity built, seat capacity that they have to build in, or from the point of view of thing providing the services. So that scenario is never doubted. However, I think what one is not very comfortable as an investor and analyst, the kind of the situation with the ATF, the pricing structure, as a result of which I think most of the times when the crude oil prices goes up, this particular ATF becomes the villain in the pack, and I think it affects the entire investment program of investors. That is what something which I have never been liking into the aviation business. Having said that, I think one would probably like to stay focused more on the ecosystems where these companies are operating. Maybe I think you have indicated the hospitality sector. That is one area where things are looking relatively more stable as far as growth outlook is concerned. India is very fast adapting to the tourism economy and tourism being treated as an infrastructure. So from that perspective, I think the hospitality sector could possibly remain, I think, better pick as far as our approach is concerned in our portfolios.
Well, Class of 21, that's the new season which is coming up on ET now very soon. And this is about companies which have gone public in last financial year. And our first, when the season is making its debut, our first guest is PB Fintech. PB Fintech, popularly known as Policy Bazaar, the stock was the haloed stock when it went public, but then came the selling by anchor investors, and the stock, in a sense, that just before budget cracked below 400. But are things looking up? And what about the path to profitability? All that and much more in our first series, in our first episode of Class of 21.
See, we're a marketplace.
Yes.
So, and this is where people misunderstand. A lot of people think direct players are competition to us. They're not competition. Almost more than half of our sales come from direct players. Because as a direct player, where do I get volume from? I can get it from Google, I can get it from brand, or I can get it from marketplaces like Policy Bazaar and Paisa Bazaar. Now, for the consumer, what's the benefit? He wants a loan. He doesn't care who gives it to him. He wants to know, I want 5 lakh rupee loans for the next 3 years. Who will offer it to me fastest? At what interest rate? And for that, he comes to Policy Bazaar, Paisa Bazaar. Paisa Bazaar gives him a choice out of 100 odd partners. That because every customer is a different segment. There's some people who are very well off. They will have pre-approved offers from the top banks. There are some people who cannot get a loan at all. And they would have, you're building a
Some
sustainable...
riders are there, yeah.
And no, you will almost have different kind of offers or very specialized lenders who would be lending to them. So building that entire marketplace and making it work in a commercially sensible way for the suppliers and for itself adds value to both the consumer and the suppliers. And so it has a place out there. Of course, many players will come. And
What is the MDP? What is the MDP? The spreads which you enjoy between...
roughly about 2.5%.
Do you think it could sustain? Because credit card companies which are taking risk of their own capital, they get a 2.5% spread. Here you are not taking
I'm
any
talking
risk.
about personal loans.
Okay.
Personal loans is about 2.5%. On credit card, we get an acquisition fee.
Okay, that's about it.
That's it.
Meantime, Naresh, let's get in your view then as to what the outlook is on some of those stocks that have been, in the spotlight on the back of news. What's the view on some of those defense names? Have you checked in on any of the charts?
So out of the defense names, I continue to like Bharat Electronics, just underperformed and is making a good enough consolidation and a base. So at say the last breakout for the stock was 85.90, recently started recovering from those levels. Once it crosses 100, 105, it would get into momentum, but at 90.95 is a good zone to accumulate Bharat Electronics. The next one is Bharat Dynamics, which has been sideways after that initial bump up from 450 to 900, where it topped out in April of last year. Then it has been consolidating between 800 to 1000 rupees for the last 6 months. So this is a stock where 800, 850 is a strong base. Once it crosses 950, 970 would be a sharp takeout. So these are the two names which I like in the defense pack as such as of now. The rest of the names are still in a consolidation mode, could take some more time before the next leg comes in. But BEL and BDL look the most interesting names.
Deven, do you think that yesterday's acquisition by Motherson Sumi has been fairly priced? Any views?
When I have not, I think, actually gone into details about the valuation. So maybe I think at some other point of time, I may be able to tell you more about it.
Two other names which continue to remain in focus, and that's Minda Corp and Precall after that sizable block deal that you saw, and all the speculation around whether or not this is going to be a hostile takeover. Once again, there's been a clarification, and Minda has reiterated that it will remain a minority shareholder in Precall, and they are not looking at a hostile takeover by any chance. So that's going to be another segment which is going to be in focus right now. In fact, Minda Corp has acquired that 15% stake, like I told you, in a block deal about a week or so back for 400 crore rupees in an open market cash transaction. Let's hear out what Minda Corp had to clarify in their conference call.
As you all are aware that Minda Corporation has purchased 15.7% equity in Precall for a cumulative amount of 400 crores through on-market transactions on 17 February 2023. The shares of Precall are purchased solely for the investment of the surplus funds available with the company. There is a board mandate to deploy cash, and this is the best use of the funds after evaluating various opportunities over a period of time. We have analyzed the performance of Precall over a period of time and observed that it has a significant potential for growth. Minda Corporation investment in Precall is through market purchases, constituting a minority stake, and this investment does not grant any special rights. Minda Corporation will continue to focus on its consistent, sustainable, and market-leading performance.
Okay, yesterday the one space which was buoyant, which is of course, besides cement, is some of the mid-cap IT names. So Coforge held out by 3.25%. You had Persistent as well hold out by 3.25%. Both these names were good and buoyant in trade. Deven, I don't know if you're relooking at IT. Most of these names have lifted off quite a fair bit from their 52-week lows already.
Yeah, I think yes, we have been liking some of the niche companies within the mid-tier IT segment, and companies which are basically providing the engineering solutions, companies which are providing the solutions in the autonomous vehicle segment, companies which are providing the niche solutions in the cloud computing space, the likes of LTTS or LTI Mindtree, or for that matter, Sand Technologies, Tata Elxsi. These are some of the companies, even KPIT, some of the companies which we believe are having a right, their position is right as far as I think the business segment is concerned. And that's where probably it makes more sense to buy them into the portfolio. The market is giving an opportunity currently at this point of time. We believe that I think around 20-25% kind of average growth is being seen in the revenue and the profits over next 3 years, at least I think from whatever the business that they are executing or the order book that they are executing. So from that perspective, we like to buy these companies into the portfolio, particularly when the market offers them under corrections.
Okay, let's look at the PSU banking space. And Naresh, this was the go-to space, but most of the PSU banking stocks, either they are in a consolidation phase or they are lacking any momentum. Do you think the big momentum move what we saw in PSU banks, let's say in 2021 and better part of 2022, that's history now?
So I would doubt that. Maybe in the smaller PSU banks, yes. In the larger PSU banks, we are just getting out of a longer term trend, say, or starting a longer term trend where it could sustain. Say after the huge move, so say Bank of Baroda from July at say 90, 100 went up to 200 levels, and now consolidating for a few months would be normal. Say the recent lows is where I would keep my say stop loss, which is where the view changes. So if we break the recent lows and sustain below that, that is where we can say, okay, the top is in place and maybe the whole trend has got changed. As of now, it looks difficult. So say, for example, in a Bank of Baroda, that would be a price of 145, 150. In a State Bank of India, it would be 480. So till the time we don't break those lows of February, the momentum remains positive and it's still a consolidation. But I would not venture out in the smaller PSU banks because some of them could have topped out.
Okay, let's get in those mid-cap recommendations going as well and find out what exactly it is that our chart is picking out. And Kunal, run us through your top bet.
So I would suggest a buy on GNFC now. GNFC, GSFC, both these stocks they started to get into a breakout mode yesterday. GNFC was just about on the verge of closing above its 50-day moving average, about the 556 mark. So would suggest this as a buy. Targets of 588, stop loss to be kept at 540.
Okay, Naresh, let's get in your top mid-cap call.
So that would be a buy on Indraprastha Gas Limited, IGL. The stock is trying to knock at that 440, 445 mark for the last almost 4-5 sessions. That's a major breakout point for the stock. And oil and gas as a sector is looking very interesting. The whole sector has gone through a consolidation phase, and the returns have been terrible for the last 2.5 years. And now say they're still available at July 2020 prices. So there could be a big catch up, and that is where IGL, MGL, a lot of these names are coming closer to a breakout. So IGL is something which is just 2% or 1% away from the breakout, expecting it to break out going forward. Preempting it, so the risk reward is good. Stop loss at 424 and a target price of 480.
Right. Okay, Deven, before we let you go, anything that's looking attractive in this listless market, anything on your radar or anything that you've bought recently?
I shall continue to would like to give preference more to the automobile companies. Whether I think you buy into the OEMs or you buy into the auto ancillaries, I think the opportunity is going to be opening up big time, particularly with the scrappage for commercial vehicle, which is becoming now a reality. From April onwards, the government vehicles are going to be the first on the block, which will be coming up for scrappage. We believe that we are likely to see an additional demand in heavy and medium commercial vehicle of around 2 to 2.5 lakh vehicles eventually. So that is one area where I believe that I think the companies like Ashok Leyland, Tata Motors, they're relatively much more stronger and I think much better position at this point of time. Having corrected the cost elements, I think as far as Tata Motor is concerned, I believe that I think this company offers an opportunity from investment point of view. So likewise, I think many other automobile ancillary companies we particularly prefer, given the kind of a growth that they are experiencing currently with the market opening up for them. The auto space remains, I think, relatively more favorable for us at this point of time.
Okay, Tata Motors it is for Deven. Deven, always good to have you on the show. We'll let you go on that note. Let's